In a market like this, the one thing that is an outperformer today is the rupee. It's risen a little, 0.1 over a gain that we saw on Tuesday as well. The rupee is now back at mid-August levels of what, 79.3 per dollar. Lata, your thoughts?
Well, actually, the stock market is not the only place where we have decoupled. What I wanted to say is that both in the currency and in the bond markets as well, India is an outperformer. The currency, rupee is rallying despite all Asian EMs lower today, primarily because the dollar index is once again back at that 109 mark. This is, of course, there were strong FPI portfolio flows on Tuesday, and probably a residual amount is flowing into the market today as well. Lower crude is clearly a pro-rupee sentiment, and that will make a rupee shorts cover. But more than that is this RBI's strong defense of the $80 mark, which is also making exporters nervous and bringing them into the market. Every time it goes towards 79, 80 or thereabouts, people are coming in to sell, believing that they may not get higher levels thereafter. The bond rally is also very important. The 10-year yield fell to as low as 7.16 at a point in time. And remember, just last week, they were trading at 7.3%. So that's quite a rally that you're seeing. This is, of course, strong short covering in bonds because of the lower crude price, now at $94 Brent. Last week it was 105. But more importantly, this chatter of bond inclusion is catching on, and there is an expectation that some months down the line there could be big buyers in bonds. There is also a chatter of HDFC having raised 10-year money locally. Normally when it does this, HDFC swaps it in the OIS market for a floating rate. They sell fixed and they take floating. And those people who sell the fixed to them come and buy bonds to hedge their exposures. I mean, it's a little complicated, but the long and the short of that is that there is bond buying even on for those reasons. And therefore, a goodish bit of decoupling of the Indian currency and bond market from global markets.
Okay, thanks a lot for that. Perhaps that's what's happening in the equity markets as well, right? Decoupling compared to its global peers.